Welcome back, traders. It's John. It's time for the next GMU Extra. In this episode, we're going to look at the psychology of round numbers. Now, would you rather save 90% with a product discount or 91.27%? Some recent research in 2020 published in the Organizational Behavior and Human Decision Processes magazine had some interesting findings. It talked about how our minds prefer nice round numbers over irregular ones, even when the irregular option might be a better deal. So when we give ourselves very specific numbers, our evaluation capabilities decrease, and we tend to give those numbers, very specific numbers, negative connotations. Now, previous studies on the subject had shown that non-rounded numbers seemed more trustworthy, and because they were so specific, they reduced the inclination to negotiate the actual number. Now, this comes up in a lot of different contexts. Doctor medications, for instance, 5 milligrams, 10 milligrams, those are common dosages. Doctors don't give dosages of 8.2 milligrams, even if it might be the ideal dosage for a patient. It would just be too inconvenient for pharmacies to carry all these different quantities per person. Even judges who make sentences, you always see terms of sentences almost always end in a 5 or a 0. They're easy to multiply, they're easy to add. Round numbers are easy for our brain to quickly deal with. Now, the stock market, as we all know, is full of numbers. Market tops and market bottoms throughout history have had an association with round numbers. The NASDAQ 5,000 and the 10,000 level in NASDAQ over the past 20 years has formed some tops and bottoms. And going way back in history to the Dow Industrials, the 100 level in the Dow in the early 1900s was support and resistance. And we'll look at that. Now, when we get to individual stocks, we look at individual psychological prices. And the psychological prices to be aware of are 50, 100, 500, 1,000, 5,000, and 10,000. Now, you might ask, what about 200 and 300 and 400? Yes, they are round numbers, but the psychological prices are the ones that I've provided here that we want to be aware of in the market. Now, psychological valuations come into play as well. And the ones that we want to be aware of are $5 billion valuations, 10 billion, 50 billion, 100 billion, 500 billion, and 1 trillion. So let's look at the Dow Industrials. This chart is from 1906 to 1949. It's a weekly chart. You'll notice that I've drawn this blue line at the 100 level in the Dow. And 100, from 1916 to 1925, 100 was constant resistance for the Dow. It got over it only very, very briefly, but really struggled to get above it. And it really wasn't until 1924 that started a bull run that eventually became part of the Roaring 20s that it finally cleared 100 for a significant upleg. You'll notice that after the 29 crash in the 1932-33 period, resistance was found at that same number 100. There was resistance and resistance. And eventually, in 1934-35, the Dow got above that and started to, all of a sudden, 100 turned into support for the market 1, 2, 3 times. And it wasn't until 1942-43 that the Dow got above 100 and has really never looked back. So here's something more recent. Here's the NASDAQ Composite weekly chart, 1997 to 2023. Now, if you were around in 99, the .com market top was into the 5,000 psychological level. Actually, it was 5132.52. And that top at 5,000 was in place for a long, long time. You'll notice that in 2015, the market ran into a lot of resistance in this 5,000 to 5,200 area, couldn't really get through, it backed off. Finally, in 2016, late 2016, 2017, the market got above 5,000 and found support there at that psychological level and started its next upleg from 2017, really all the way out until 2021. So we can see here that the market doubled, went from 5,000, and right before the COVID crash, you can see we topped right into 10,000, another psychological level. The actual top was 98.3837. Then coming out of COVID, we had a good run until late 2021. You'll notice that the bear market for all of 2022, where did it bottom? We bottomed right around the psychological 10,000 level. The bottom was actually 10,088 and change. So these levels are important psychologically for markets. Now let's turn to individual stocks, because with individual stocks, these psychological numbers can become more areas of support and resistance. You'll notice a lot with individual stocks, they will form highs or tops that end in 4 or 9. And the reason is, let's use the example of the $100 level. People that want to sell the stock want to sell it at 100. Everybody starts to sell, and the stock will actually peak somewhere around 1999, that 9 digit. Same thing at round numbers such as 75, ending in 5s, 0s and 5s. So you'll see stocks also peak out with 4s. Now the traders are trying to sell at those round numbers, and you'll see these 4s and 9s happen quite often at tops and highs. Now the converse of that is lows and bottoms. You'll see a lot of lows and bottoms in stocks happen with digits ending in 1 or 6. Traders are trying to buy at a round number. So if the $10 level, the stock's coming down, people want to buy it roughly around 10. The stock tends to bottom at 11, which is a 1. And same thing, trying to bottom at 75, you'll see that the 6 digit will show up as 76 becoming the low. Not always, sometimes we undercut, but as a general rule of thumb, you see this quite often. So let's look at some examples. So here's some psychological numbers at bottoms. Coupa Software from 2020. You can see right here, here's the COVID plunge. And where did Coupa Software bottom? It bottomed right at 100. The bottom of this base was $99.01. It became the bottom of a cup formation before the stock broke out. Peloton 2020. You can see here, this is later in the year, in November, and you'll see the stock came down and it undercut 100 once, and then it actually recovered. Then it came back down and got support at 100. And you can see the bottoming process. It never actually closed below 100. It got support right there. Monster 2013. Again, a base formed in this stock using the psychological number of 50. You can see the stock actually bottomed out at 51.15, very close to the 50 level. And you can see this is actually ending in a 1. So this happens throughout market history. Here's an old chart from Xerox, 1974-75, the bear market. And as the stock market bottomed out in late 74, you can see that the psychological level of 50 here I've drawn on this chart for Xerox became support multiple times. The stock came down to that 50 level right here. 4 out of 5 weeks closed just above 50. Then it came back down and retested, closed just above 50. Then it undercut and quickly recovered 50. Then it came down one last time, forming a proper cup with handle. And you can see the bottom of that base was right around 50. So it happens a lot throughout market history in individual stocks. Now, more recently, here's the chart of Tesla in 2022. You can see here, Tesla, from its peak, fell almost 76%. Well, where did Tesla bottom? Tesla bottomed at 101.61, right around the number again, psychological level of 100, people trying to buy that stock on the cheap, so to speak, and they bought it and really got the stock at 101 was the final low. So another more recent example. Here's now looking at some of the tops. Here's HTHT from 2018, the Chinese hotel company. Major run, late stage basis form, comes out of a wide and loose base. Where does the stock top? It tries to get out of this late stage base, tops at 49.60, right into the psychological 50 level, and then the stock broke down. YY from 2014. Again, long run, late stage base breaks out, then the stock peaks at 99.39, right into the 100 psychological level. In Weight Watchers in 2018, you can see this one again. After a long run, it actually peaked into the $100 level at 105.73 being the ultimate peak. I like to show this one of Square because it happened twice. It's a great example. And what I will show here is Square had a base, and then it moved almost 100% from this last base. And you can see the stock actually went into a climax run. And where did that climax run take us? It took us right into the 50 psychological price level with a peak at 49.56. Now, here it is on the weekly chart on a broader chart. You can see here's the climax top. We peak into 50, but the stock didn't completely break down. It formed a base and it formed another base, but the stock ultimately had another move. And where did it go? It went from 50 to 100, another 100% move, and it peaked out at 101.15 as the market peaked out in September, late September of 2018, before we went through a bear market. So I love this example because it shows the psychological numbers 2 times. Now, more recently, and I've shared this in a recent general market video, NVIDIA on the left. Now, again, the same principle as the Square chart. When you get a base, and the last base for NVIDIA was around 188, this little cup structure here. Well, this stock has gone up 100%. And generally, if you look at a lot of winning stocks, if you make a 100% move and you have not had another base, and you've gone 100%, the stock needs to rest typically. Now, in this case, we have the $500 psychological level in NVIDIA, and we got up to, I believe it was 480 and change. So it's pretty natural to say the stock at least is going to pause at this level, and it's starting to pull down a little bit at the time of making this video. You know, when you see a 100% move with no base in between, it could pause. It could be a top if a stock's going to make in the long run, or maybe the stock needs another base. Now, NVIDIA is still very, very young in this bull market, so I don't think it's topping, but it probably needs to form a base structure. Apple on the right is using psychological price valuations. The 3 trillion line on Apple is approximately 194 on the stock. And in late 2021, when the market topped, Apple topped. Apple topped just shy as it got into the 3 trillion valuation. It got up to 183. Then it went through the bear market, and then we've had this great run in Apple. Well, where is it? Is it pausing? Right at that 3 trillion valuation, right around 194. It got just above it to 196, 197. And then it had recently had earnings, which have brought it back down. It probably needs to take a breather and either form a base before its next move. So you see, these happen in history, and they are happening today as we speak. So here's another example of using these psychological numbers in practice. Now you'll notice this is a chart of Lemonade in daily chart from 2020, and it's showing a base. And I wanted to use these psychological numbers if you are a breakout trader, something to be aware of. So the principle is use a buy pivot that is slightly above a pivot price that is close to a psychological number ending in 5 or 0. And why? In this case, this level right here in black is 100 on the chart. The red line represents the pivot point of this cup base, which is actually the standard pivot at 96.51. So why do we want to be aware of this? Well, option strike prices usually are priced in increments of 5 and 0 for pricing. And what happens is we get lots of clusters of orders in those zones just above and below those option prices, and they can act as support and resistance. So the concept is to let the price actually get above the psychological number and close above it, and then use the high of that bar as your pivot to avoid some of the congestion around the psychological number. So if you go back to this chart and look at this case, the stock tried to break out, actually ran right into 100 and got rejected. So if you bought this pivot at 96.51, you probably got stopped out. The stock regrouped, had another chance to break out, and you can see It actually got up to probably 110, came all the way back down and closed below 100. So it couldn't get close above 100s. So you would have gotten on a widespread day, you may have gotten stopped out. Stock came back in, regathered itself. It finally had a day where it closed above 100. You can see that right here, where we've kind of gotten above this congestion. And once that happens, the concept is use the high of that bar as your pivot day. So once it closes above the psychological number, you're buying on a breakout above that high of the previous day. It's something you might want to consider. So we've covered a lot here with psychological numbers and valuations. It's something that you should just be at least aware of in your trading and some of these levels, and consider it maybe specifically on tradings, particularly around some of these levels if you're trading breakouts, or be aware of them as your stock approaches it and maybe it's been on a long move and it needs a rest or possibly topping. So that's the GMU Extra on psychology of round numbers. Here's where you can find me. Hope to see you on the next GMU Extra.